your parents' story. I've always found it interesting because my dad is a similar one.
Hmm.
But obviously we got CPI coming out, but maybe after it comes out, we're kind of waiting for a move.
Yeah.
But what's it called? So yeah, we'll just wait for a couple of people to hop on. Are we on YouTube right now?
Yes, just started it.
Awesome. All right, so open the chat over here. What's up, Jen? KB? Cool.
It's good, everyone.
What's up, man? How are you? How's your week been?
All good, all good. Yeah, it's
Good stuff.
been a quiet week in terms of trading. But
A little bit. I think Tuesday was a nice day. Tuesday
uh-huh.
we had some nice moves, but other than that, it's been a little bit of a dud.
Yeah, I've mainly been waiting just for CPI, to be honest.
Okay, yeah, that's smart. How about you guys? Wow, everyone hopped in. Jen, JD, Jais. All right, awesome. So I think we got enough people in here. We could start breaking everything down. So obviously we got CPI coming out today. Show me you can break down US 30 when I'm done with gold.
Hmm.
But with CPI today, so they're expecting a little bit of a decrease on the year, but an increase on the month to month over here. But I'm expecting, you know how we always talk about on gold, if you can set like buy stops, sell stops, or the best way to trade news is to wait for the news to come out. I think if there's ever a time to really set buy stops or sell stops, it'd be now, especially with the setup on gold. I'm expecting higher inflation. I wouldn't be surprised if we do. I know they're expecting lower, but if we do get higher inflation, obviously that's gonna trigger the Fed to increase rates even more or continue the same exact pace that they are increasing rates by 75 basis points. But there has been talks, as you guys probably know, that they may decrease if we get lower inflation. I don't think so, but we will see. But looking over here at gold, it looks like we ended up breaking this trend that we've been in, right, since the beginning of the Ukraine invasion, right? We've been in this bearish trend since the Fed has been increasing rates, and now we've ended up breaking through that area, bouncing off that 1615 area, 1680, right? Bouncing off that area pretty hard. We got that strong last week, strong bullish candle close. Next one, this week, ended up getting that bottom wick formed past the high of the previous candle, and now we're pushing through 1700. So can we continue this trend if we get lower inflation and there is that sentiment that the Fed may slow down the rate increase? Or is inflation going to continue to rise and we're going to, end up tanking from over here? And this is just like a liquidity grab to continue right back down. But we'll see the lower time frames looking at the daily. So the daily right now, we also had a nice move from. This was actually interesting, and as Sharma's a little bit more advanced when it comes to fundamentals. This move created such a big move. Did you notice that, Sharma?
Yeah.
Does this normally move like that?
Not normally, but again, it comes down to where are we sitting at when it comes to just the economic outlook and everything like that in general. So obviously at the moment, you're coming close to the end of the year. We already know what CPI has been doing the entire year. And now with the rate hikes that we saw, is this going to be the last 75 base point hike, or are we going to see some more coming out? And the way that Powell had pretty much framed his entire speech, we were watching it together, where he was saying that we're not slowing down just yet. But yeah, the whole sentiment is that they're coming to an end of it. So when you start to see economic optimism like that dropping down, usually it's before below 50-ish, below that area. That's when you start to see like this contraction essentially happening. Same thing with PMI data too, right? Once it drops below 50, that's really where the contraction starts. So here, with economic optimism dropping, from like 41.6 down to 40.4, a full, 1 point drop, and that really tells you that at least for the next couple of months, there's not a lot of optimism that's settling in. So we already know that next year is all going to be about recession.
Oh yeah, 100%. It's probably gonna kick. Like obviously we're in a recession right now technically, but next year I don't think we're gonna feel it until next year. But I figured it was a mix between this and just anticipating the congressional elections as well,
Yeah, those are still
which was
going
a big
on.
surprise. What was that?
Those are still going on. So if you go onto like Bloomberg,
Yeah.
they still have, they're still waiting to see like who in the Senate and the House, all that, like all the different races. Not everything is in still yet. They're still counting.
Yeah, I think we're waiting until Friday,
Yeah.
possibly to. I think we got Arizona's results. Nevada is Nevada in?
Let me check here.
I didn't check since yesterday, but yeah, there's still a bunch that still need to be counted, and but it's been a kind of a big surprise when it comes to the election. They were expecting a much different result, and I don't think we've gotten that much of a move from the elections
Mm-hmm.
so far this week as we were expecting. But based on the technicals over here, again, we got that strong 2 days ago, strong move out of this bearish trend over here. Strong bullish candle close. We grab liquidity, and right now, so far, we're holding a support. Right, we tapped into 1720, 1721, 22 into this area, right, and ended up rejecting here, closing a bearish candle. Right now, we're still holding support. So obviously, we're kind of consolidating right now. Now, looking over here, our next resistance is up around 1730, right? That we could end up coming in and tapping into, or even pushing through if we get, lower inflation, right? But right now, we are sitting in this range. And now, as you can see, perfect environment. If you guys do understand how CPI moves, and last time we got that liquidity grab, and then prices dropped on gold. Right now, price is just kind of consolidating right in this range, around 1700, and then 1716, 1717, right in this area. So if you're expecting high inflation, I could very much expect a liquidity grab, and then price drops below the support and mirrors this move to the left, continuing right back down to 1680 and setting a sell stop right here with your stop loss in the middle of the range over here might be a good idea. I don't think I'm going to be doing it today. I'm just going to wait for the reaction to the news as I always do. But like I said, if there's ever a time to do that, now's the perfect environment, especially expecting what you may expect as far as high inflation or low inflation, setting that buy stop and riding this thing up. But right now we're still holding the support. Looking at the 1 hour, nothing much is going to be changing, right? Keep bouncing off this area. Bounce hard right here. We got that move yesterday, right? And then price ends up rejecting 1715, 1716, and then closing right back into the range, coming right back down into 1703 to hold support again. But right now we're creating these like lower highs. I'm not going to keep this trend line on here, but creating these lower highs. And right now we're creating a higher low so far right here. So with volume, right, and low inflation, could we push this thing through this area? Why is that not? Oh, just gonna get rid of this. Looking at the 30-minute, same exact thing. There's not much of a difference here. But like I said, sell stop right below 1700, maybe 1700 flat if you want to, but you could put it around 1701 and ride this thing down with clean move to mirror for this correction. Even if we do have low inflation, I could understand us pulling back at some point and then continuing back up. But like I said, we'll see. I think the best move for you guys is to just trade the reaction to the news. Never going to tell you to do something that I wouldn't do. I'm just telling you a good idea might be to do that. I'm just being transparent. I'm not going to be setting the sell stop or buy stop. Sharma, you want to break down US 30?
Yeah, let's do it.
Anything to add on gold?
Nope, just waiting for price to break out of this range. I'm personally not going to be trading in this range either, regardless of however CPI comes out. Alright.
This is all you.
Perfect. Alright, let's start off with the monthly time frame first. So you've got the entire support down here. 28,800 level. And then I usually don't make this a zone, but I'm going to make this a zone here on the monthly time frame right into this level, just so we can see that was previously a resistance right here, and that's exactly where we tapped into. This was like the interest rates that came out. We double tapped into like the 33,000, pushed back down, and then we came back up into this area earlier this week, and that's kind of where we're hanging out at the moment. Another level that I'm definitely going to mark off though here is going to be these bottom wick rejections. With the heavy rejections here until price pull back up, gave it enough momentum to come back into this previous consolidation, and then finally we started breaking below these areas. So this is what I'm going to mark off, because as soon as price does break below this, the next stop is going to be the current monthly bottom wick, which is that 31,750 area, and then you can look for those minor levels, for example down here, and then continue down to 28,800. The main thing here to understand is that there's a very high chance going into now the holidays and everything like that, that we could hang around this area for some time, where price could push down a little bit, and then as we get closer to holidays, especially like that time between Christmas and New Year's, we always know that there's some sort of a rally that tends to happen in the stock market, right? It happens every single year. There's just a ton of volatility that could probably bring us back up into this level here once again, and then going into next year, so like second half of January or even February, getting into those where really the target for the interest rates at the moment is up until like March 2023, where they're targeting around that 5%, just over. So can we see the adjustment just over 5% getting closer to March? And I think that's where we're going to end up seeing that drop happening. So I do expect that drop to happen as we're going into next year. So early next year, if not by the end of the year already. Does that make sense for everyone?
100%.
All right. So that's that 32,300 flat. And then, this is going to be a very key area. So if you're trading between this, just understand that really the limitation of your trade is going to be between this zone right here, which is that monthly resistance, coming down into like 32,000 and 32,300 area. Drop down onto the weekly time frame and then zoom out a little bit, and you'll see how price reacts into this area. Grab that liquidity, continue pushing back up, created a new high, and then you started this consolidation. We came back and we made those bottom wick rejections into this 32,300 area, but we held onto a support right into this level, like around that 33,000. Push back up. Once again, grab that liquidity from all this consolidation here. We come back and revisit that once again before selling off into 28,800, and then we push right back up into that 33,000. So that in itself, all of this should give you the understanding of how important this level is. Obviously, like we've said it like multiple times in the live sessions and even in the weekly outlooks, price is not just going to continue breaking below 28,800, because now you're coming into those pre-COVID times, and when you look at the history of US 30, you never really see it dropping below the previous lows, which the only exception was back in like 2008, 2009 here. And then after that, after even those corrective moves that happened in 2015, 2016, and then even with COVID, you're still maintaining overall a bullish trend. So at this point, at each of these points in 2008, 2009, and then back in 2020, this is legit when the Fed stepped in and provided liquidity. And they can't obviously do that right now as they're trying to control inflation. So that's why you're coming back into these liquidity areas, and that's why I'm giving you the timeline of, going into next year instead of just saying like the next couple of weeks or by the end of the year or something like that. It's possibly not going to happen because the Fed needs to continue increasing those rates to really control this inflation. Now, if today's CPI data really shows us that the US CPI year to year dropped down from like 8.2 down to 7.9, then that's a good thing. That's a start. That's exactly what we need. That would bring in a little bit more optimism. But if we start to see that CPI still not being controlled and we're still sitting at like, the 8% level, then there's a very high chance that we could probably see even one last aggressive hike. And then after that drops down to 0.5% hikes.
If we could stay on the weekly, obviously we're in a different market environment right now, because we were massively recovering from that 2020 crash, if you want to call it that. But back at last November in 2021, or actually 2 Novembers ago, back in 2020, price ended up rallying over here and doing something kind of similar right in the same area. So I'm wondering if we could get some, obviously if we get that lower inflation, we'll get the optimism, can price push through this area and kind of get some similar price action over here before maybe tanking towards the beginning of next year, coming right back down. But we got to see if we're going to respect this 34,000 area.
Yeah, so if we can continue breaking past that, this is kind of the area that I'm also targeting for price to come back into. right? Continue grabbing that liquidity as long as it can maintain. Notice that it's still going to maintain the structure regardless, right? These are just liquidity areas right here in between. Regardless, as long as we can maintain this bearish trend, price really doesn't break above, 34,000 or anything like that. You're still good to go. This is all just liquidity, and these are short-term trades that you can take advantage of.
100%.
So I'm still gonna remove that until we break past that though. But yeah, the next stop for you would be like going into the 34,000. Now coming onto the daily time frame, same thing. Zoom out a little bit just so you see how price reacts into this area multiple times. And then we did try to break past that, and then earlier this week on Tuesday, and then we held on to a nice strong resistance. Price comes right back down, breaking those previous daily lows, and we close almost at the low of its own range that it could at that time of this daily time frame. Now with the new daily candle forming, can we get that optimism to come back and push up into these areas and then maybe further up? For me personally, I'm not trading anywhere in between this range, because once you drop down to the 4-hour time frame, you start to see that there's volume that's starting to die down at this level. That's essentially what happened all of yesterday, right? Where you had price dying down, you start to see that these candles are barely breaking the previous highs, not really showing you a lot of volume, and that's that 32,500 level. So you're gonna mark that off. If price can break below that 32,500, then we can look for a quick trade coming down into this 32,300 area, which we know is a key area from those higher time frames that we just marked off. Or if price breaks above, let's say 32,800, and then continuation back up, coming into this 33,300 area, then that's a potential trade. Anything in between, this is an entire no trade range. You start to see that a little bit more clearly when you drop down to the hourly time frame. So yeah, as soon as price breaks out of this consolidation, it may look like clean moves, but once again, you're coming right back into this volatility area where you've had consolidation previously. So for me, a range like that is still way too small to really, risk between that 1 to 3%. And then continuation back up. So I rather just wait for price to, is it going to tap into this area and then sell off and then, trade something like that, or wait for price to hold on to some nice strong support areas and then continue push back up, mimicking a move like this, right? Can we essentially catch a similar move with this bullish momentum? Drop down to the 30, same thing on the 15. All this is just consolidation.
Waiting.
Yep. All yours, Steph. Go for it.
Awesome.
Any questions about US 30?
Holding a nice support here on gold.
Mm-hmm.
I think we may just be grabbing liquidity over here, and then I'm hoping inflation comes down. It's especially anybody in the U.S., and then that kind of trickles into any other countries as well. If we have lower inflation, it'd be good for the world, I would say.
Well, that was one of the concerns of Europe specifically, that if the U.S. continues to have high inflation and they continue to increase those interest rates so aggressively, it's going to end up having a trickling effect into the European market too, like it did last time.
Yeah, 100%. It costs more to do business right now.
Yep.
With the U.S. So the less their interest rates are high, the better it is for everyone else. I read somewhere else that another country is really struggling right now to do business with us because of our interest rates now, and they can't increase as well. Like other countries, if they increase rates as much as we are, they're going to struggle a lot more than we are right now.
Absolutely,
right?
especially the emerging markets.
Yes, and we're not seeing a lot of the detriment to this just yet. Like it may happen next year. That's why we're saying we're really going to see a hard recession next year, probably in the next 6 to 8 months. But for other countries, they're probably already seeing that. I think Pat hit on that last stream that we had. Is he in here? R2D2? What his Zoom name is? So we got 5 minutes left. Anybody got any questions? Anything on YouTube?
Nothing on YouTube so far.
Awesome. Got a small show. Quentin, how you doing, buddy?
Doing good, man. Doing good. I joined the stream earlier. I don't know if you asked me something when I joined. I didn't have any sound.
I was in the middle of a conversation with Young, and then Sharma called me to send the link over. So I saw you jumped out real quick to fix it. I guess
Yeah,
you
yes,
feeling
sir.
better?
Yeah, I'm doing great right now.
You say I'm better.
Yeah, yeah. And I have 3 days of gym behind me right now. I just have my muscles are sore, but that's in good pain.
Hell yeah! I was actually telling Meg, my wife, that today she was saying how sore she is because we've been going to the gym every day together, and I was like, good. That's exactly what you
Good.
want. And she was like, yeah.
That's the spirit.
Oh yeah. Embrace that pain. I got I got to match you with that squat. Not squat.
Isn't it today?
Today I got legs today. Big
Yes,
leg day.
sir.
I won't be able
Waiting
to
for
walk.
your waiting for your videos.
Oh yeah, I won't be able to walk.
That's it. You gotta shake when you go get out of the gym.
You're like holding on to the stairs,
Yeah.
the railing.
Walk on your hands if you have to.
Yes. Walk like a monkey. Yeah, I'm pumped for Sharma. That's a big trip.
I'm excited too.
Should be. I mean, from the pictures I saw, it looks really fun. And you guys are going into summer down there, right?
And it's gonna be last week of November in India, and then let me pull up the calendar real quick here once again. Yeah, so last week and a half of November, we're gonna get there on the 24th.
Okay.
And then we're gonna be there until the 4th, and then after that, the remaining days are gonna be in Bali until the 15th is when we get back.
15th of December?
Yeah.
Okay. That's awesome. You know what, I'm gonna set this over here. We didn't break GJ down today. It's obviously been ranging over here, waiting for CPI as well. But just want to get US 30 over here.
So this week is like, we've talked about it many times, but when you guys are back testing, when you guys are, collecting data and everything like that, put this in like your notes as well, that after a big week, like last week, for example, we had a lot of economic data coming out, right? We had interest rates coming out from like Australia, you had the JOLTS job openings coming out, you had the manufacturing PMI come out, you had interest rates come out from the US. You also had, NFP week. It was interest rates from the UK coming out. There was a ton of economic data that was coming out, and the market did move a lot. Usually after a week like that, you start to get like 1 or 2 weeks of just like consolidation, of price coming back into key areas, collecting liquidity, and then after that, you're going to get another fundamental heavy week. So this week is one of those like resting weeks, basically. Right, where yes, we do have like CPI data coming out. We do have like is it consumer sentiment that's coming out tomorrow, and then
yes,
and then going into
yes.
next week, you're gonna have same thing. You're gonna have more economic data kicking in. You're gonna have like the Empire State Manufacturing Index coming out. You're gonna have PPI coming out. You got CPI from the UK coming out. You got CPI from Canada coming out. You got retail sales coming out from the US. You got you got the Treasury currency report coming out on Friday. You have a lot of economic data that's coming out next week. So this is more in a preparation of those fundamental heavy weeks.
There's that buy stop or sell stop that would have played out. We got lower inflation on the year and lower inflation on the month. Let's go. So what is it? Two out of the last 7 months we've had less than expected inflation, which is good. Well, typically not good, but as of late, we've been having less inflation, which is definitely good for U.S. economy and anyone struggling right now with prices.
So this basically means that there's still inflation, right? But it's slowing down at the rate.
Exactly.
That's basically what it means. So it's not that we've, reversed inflation like we're expecting it to. It's just that it's slowing down in the pace. In order
if you
for
ask
us
our
to
president, we have no inflation now.
And then if you're actually looking at, inflation slowing down, you need it to, or, inflation not even slowing down, but like the hyperinflation being controlled and all of that, we need to start seeing negative numbers in those month to month. And that's what's going to really calm down the year over year, right? But this positive number that came out, it's lower than what we were expecting, so that just means that inflation is slowing down at the pace that it's increasing at.
That's great. Obviously, my pessimistic outlook was not correct. But again, if you would have set that buy stop, this is that perfect range when you're waiting for news to come out. Setting that buy stop above 1717, and if you did place a sell stop, you just delete that right now. You secure a majority of your profits. This is like a live back test, right? So next time that this comes out and you have a similar setup like this, go back and journal this. That's if you set it right around 1717, that would have been around 140 pips. You secure around 1728, 1730, somewhere around here. And I would have been closing pretty much the full thing. Actually, I would have closed the full thing if that was that buy stop. All right, so the more you get comfortable with that, if that's something that you want to do, I highly recommend if you're going to do that, open up another account. You throw $100, $500 in there, just as like a little gambling account. Some of you guys, if you want to throw $50 or $100 in there, it's just something that you could play with. Based on your analysis in the past and what you've seen in the past, you're going to get more and more comfortable with that. But it's best that you don't do it with your real account, your true account. Just like a little gamble and play it as it plays out.
I agree. Like, if you want to test out stuff, then like start like a small account. But one, like, I guess disclaimer that I do want to put out there, because this is like, I've been getting a lot of messages like this lately, is that make sure that your first focus is more on your strategy rather than like, trying to figure out like how to catch these moves or things like that. Try to figure out, first of all, what's the strategy that's going to be successful for you. Let's say about 85 to 90% of the time when this move is not happening. This move happens when there's high impact news coming out. Other than that, when you're looking at the other 90% of the time the market is moving, you need to first work on finding your strategy. I've been getting a lot of messages about people, first of all, getting into like funded accounts, but not really having a strategy, or not really having like a risk management strategy in place, or having a trading plan or anything like that. If you're one of those, and like you have probably blown your account, or maybe you're close to blowing your account, you've already lost more than 50% of your account, the first thing that I'm going to suggest you do is first figure out like what's your strategy, right? Stefanos and I, we trade quite similar, but there's still a lot of differences in just the way that we look at and understand the markets. So we both have a similar strategy. It's just that we look at the markets a little bit differently, and that's how every trader is going to be, right? So whether your strategy could be, the breakout trade after the price is consolidating, understanding that the longer price consolidates, the bigger the move is going to be, right? And how to catch those moves. It could be a break and retest. It could be an impulse entry. It could be, a counter trend trade, and understanding what's the limitation of your trade. Or maybe you're looking for, you're trading with the trend. Whatever it may be, figure out your strategy first and have a risk management strategy in place before you start, messing around with having maybe another account, or trying to mess around with funded accounts, or trying to mess around with trying to catch big moves, but you're risking way too much. A lot of the screenshots that I have been getting from people, I'm not putting anyone on blast, but I'm just saying, as an example, a lot of the screenshots that I've been getting from people, their wins are extremely low compared to the losses that they're getting. So that obviously tells me that you're comfortable with holding onto your trade. It's just that you need to be comfortable holding onto your trade in the right direction. The first moment that you see that price is pulling back, and it's going in the opposite direction of whatever your analysis was, that's where you should be closing out. Be comfortable with small losses and big wins. I'm seeing a lot of people holding on to their trades when they're in losses, but not holding on to their trades when the trade is going in their direction.
Yeah, those are all great points. I wanted to bring up two things too to kind of piggyback off of that. With funding accounts, I know that's super attractive right now, and there's a ton of people doing it, and I think it's smart, right? if you want to leverage another company with their funds to build your own trading account if you're profitable, I think it's a great idea. The idea is to not be on that as quickly as possible, because you want to leverage that money and put that into a live account, and then all of a sudden you're not dependent on this other company and you're paying them 10% of your earnings. That I think that's smart if that's what you want to do, but make sure you're profitable. And one thing that we put together in our group is, if that's something that you want to do, we track your account for 2 weeks, right? If you're profitable for 2 weeks and you're gaining on average around 2.5 to 3 or 4% per week, then okay, now we can start that challenge. But until then, you're just blowing money. So one thing that you could do is, if that's something that you want to do, put some money into a live account. If you're profitable for the next 2-3 weeks and you're gaining gaining profit consistently over the next 2 or 3 weeks, then you could go onto that challenge and try that out. But until then, you're going to be blowing your money on challenges. It's just not smart. You're just giving them your money, and that money if you look at their business model, that money actually goes to the people that are winning. Your challenge money. You're basically taking money out of your wallet and just giving them money for no reason if you're not profitable. So
I've just never done a funded account. No one really talked about it. I didn't even know it was a thing until very recently. So my understanding is that and correct me if I'm wrong, anyone who's here on Zoom who's probably done funded accounts, but my understanding is that you have to spend a couple of $100 to get whether it's a $20,000, $50,000 account. Is that correct?
Yeah, I think the challenge is, I guess, for a $50,000 account is around $300 on average for some of these companies.
Okay, so then how about before you jump into a funded account, when you don't have a strategy, when you're not, consistently profitable, let's say it's a $300 challenge that you have to buy, right? And then, find the first thing that I would do personally, open up $100, maybe $200 account. Something very small. The reason why I always emphasize the fact that start small, and the chances are that not everyone's gonna really, flip that account to thousands of dollars or hundreds of thousands of dollars, right? But the point being there is that the monetary aspect should be the least of your concerns when you're jumping into trading or learning how to trade or trying to develop a strategy. But, opening an account with a $150 account or a $200 account at least gives you enough room to start off with a 2-penny lot size, right? Where you can start practicing taking partials and everything like that. The main thing there, or the main focus, should be developing a strategy that works. So figuring out 90% of the time, are you going to be trading break and retest? Are you going to be trading with impulse entries, breakouts, counter trend, whatever it may be, whatever your strategy is, right? First, figuring out and establishing that strategy, right, from a technical perspective, and then adding on your risk management strategy. So just to clarify that even more for people who may not really understand what I'm really talking about when it comes down to risk management, is if price continues, let's say 10 pips, 15 pips, 20 pips in my direction, am I closing out 1-to-1? Am I moving my stop loss to break even or trailing my stop loss? Under what market conditions? Let's say, for example, right now you're trying to trade CPI, there's a massive push up. You took an entry as soon as, price broke past both of these resistance. And now, are you going to let that trade just continue on? Are you going to wait for an established resistance? Are you going to wait for an established support? Are you going to move your stop loss to break even? Are you going to trail your stop loss? Under what conditions are you going to just take, let's say, a static risk entry, which is just one entry, one position? Or are you going to break that up into dynamic risk? How are you going to break it up into dynamic risk? How many entries are you willing to give yourself? All of that is part of risk management strategy. Figuring out how much you're going to risk and what sort of entries to even take advantage of, or what type of setups to even take advantage of. That's what I would be focusing on that smaller account, right? And then obviously when you're risking money, your psychology is going to take a hit, because that's real money that you're risking, right? Whether it's a $200 account or you're risking a $10,000 account, the psychology is going to be quite different, right? Because off a $200 account, you might not feel as much pressure. But when you have a $10,000 account, right, and a lot of you guys who are starting off with that $50,000 funded account and whatnot, I know that you feel the pressure from a psychological perspective in trading. That's why trading is 90%, just psychology and understanding your psychology. So being able to, first of all, take care of all of that stuff and having a plan in place, and then you should be worrying about the monetary aspect. And really, from a monetary aspect, you shouldn't really be thinking about, I made like $100, we're good to go. Think about, the risk, the percentages, the equity percentages that you've made. And that's what's going to take you far. Because of course, like when you're on a small account, the monetary gains are going to be very small compared to something big, like a $10,000 account or a $100,000 account. Obviously, just, do the math, look at the numbers. Obviously, the numbers are going to be different. It's just that look at it from a percentage perspective, so then it puts less toll on you from a psychological perspective. So instead of just hopping in and spending like $300 on, these funded accounts, which most people are probably doing 2 to 3 times a year, if not more, use that money to really develop a strategy so you could be successful the first time that you go into a funded account. I hope that makes sense.
Oh, I'm sorry. Were you done?
Yeah, I was just saying I hope that makes sense.
No, 100% does. You put it very well. But also, like, you guys need education too. Like, it goes into that where, like, instead of putting your money into these companies to do a challenge or whatever, if you don't have a profitable strategy, it's better to put your money into a live account and trade that. But also, you could also be taking half of that money, instead of putting it all into a live account, but half of that money into proper education and somebody holding you accountable and, teaching you how to trade or coming up with that strategy the right way is the best way to do it. Doesn't matter who they are. Obviously, choose the right person, but you got to make sure you're getting the right education so you're cutting your learning curve massively, right? Like if you're just in a live account, it's the same exact thing. You might as well be doing the same thing. Where you're just putting your money into a live account and blowing that account over and over and over again because you keep gambling. You keep trading without a strategy, or maybe you do have a strategy and you keep breaking that strategy and you just keep going in circles. You don't want to be in that situation either. So just figure out the best way to put your money. You're investing into yourself. You're investing into your trading account, but the best way to invest in your trading account is to learn the right way first and then invest in your trading account. I personally think.
No, yeah, I 100% agree. I just didn't want to keep saying like the mentorship, this and that. I don't want anyone to feel like
I hate talking about that.
Yeah, because we've mentioned it, and again, like we're not trying to sell or anything, but education, first of all, like start off with the free resources. Obviously, that's one good way to kind of vet out someone who you want to learn from. You got the free resources on my page. You got the free resources on Stefanos' page. You also got like Instagram. You got a lot of information. That way, figure out like what's our style of teaching, and then what's your style of learning. Can it work together? Do you understand pretty much what we're saying, or is it too complicated? And then from there, figure out like who do you want to learn from. Maybe it's neither of us, right? Maybe you find someone else who teaches better according to your learning style. That's the most important thing. And then that's the route that you go. So 100% invest in that education, but the education, I think it could take different forms. It could be just through these live sessions that we're doing, and then also the boot camps that we do, also like the weekly outlooks that we have, secrets of trading, all that stuff. And then maybe you're like learning on your own, reading those analysis. I think FX Street is a great platform to go check out if you're trying to learn fundamentals specifically, because a lot of people will post a lot of analysis on there, and all those people are credible. Obviously, FX Street vets out their people. So, maybe starting off there. And then if you feel like, well, the free resources, I kind of understand, but now I'm hitting a plateau in my trading and I need more help, then, go and find like a mentor, join a mentorship program. Like I said, doesn't have to be me, doesn't have to be Stefanos. It could be somebody else. Find someone who really resonates with your learning style. That's going to be very, very important, right?
That's the most important.
Yeah, and make sure you're getting one-on-one time with your mentor too. I know that a lot of you guys are spending like hundreds of dollars on mentorship programs, but you're not even able to book a one-on-one call with your mentor or even message them and get a response back. Make sure that you're going with a mentor who can give you at least one-on-one session. If you're going to spend the money on a mentorship program, at least, have that one-on-one session with that mentor, once or twice a month or something like that. And then Same thing, what I was talking about, collecting that data, collecting, what's my strategy going to look like, what's my risk management going to look like, what type of setups am I really trading, all that stuff. Still education, because you're still trying to figure out and try to better yourself, right? So like I said, education can take a lot of different forms. It's just that you're never going to stop learning and trading. But before you jump into those funded accounts where you're spending $200, $300, try to get payouts or whatever, hone in on your strategy first and hone in on your risk management. And then copy paste that onto your funded account, make that work, copy paste that into your live account. It's going to be the same exact thing. Doesn't matter, whether you have $10,000 in your account or whether you have $100 in your account. If you can't have a successful strategy, you will grow that account.
All great points. Man, honestly, I think we both have the same sentiment when it comes to that. You can ask anyone in my group. You do not, if you want to be successful in the markets, you don't need mentorship, right? I'll be the first to tell you that. Even as a mentor, you don't need it. But if you want to get where you want to be a lot quicker, right? And if you want to learn people's mistakes or people's successes and what they do a lot faster and lose a lot less money in the beginning, you're going to want to get a coach. And again, it doesn't have to be us. We personally feel like we're the best because we put a lot of time into you guys, and we actually give you that one-on-one aspect of it. And, we volunteer calls. If you're struggling, let's hop on the Zoom. Let's figure it out. But again, you don't need it, right? But if you want to get to where you want to be a lot quicker, if you want to cut it down from 4 years, maybe down to 1 year, let's go.
We just got some news about the Fed.
I know we have FOMC members speaking to follow.
On Financial Juice, Fed swaps downgrade 75 basis point rate hike in December.
Fed swaps downgrade. One thing I wanted to point out to you guys too, I was telling the group, Financial Juice actually has an app in the App Store for Apple. So if you guys want to download that app, I highly recommend it. It's like Twitter, but for what we do as a profession.
Mm-hmm.
You spend a lot more valuable time on Financial Juice than you will on Twitter.
Do you want to go over what are the next setups for the rest of the session? I do have to hop off here in a little bit.
Sure. Yeah, I am looking for a nice close here on gold. You want your setups around at least the 15-minute time frame. So we're probably going to get a close above 1730 over here, right? That previous resistance. Once we get that, can we get that pullback? And don't forget, after news like this comes out, a lot of times you get that pullback before 9:30, before the NYSE opens. So do you want to wait? Do you want to try to grab the tops up here, or do you want to wait for a nice pullback where you get a bigger range to trade? With a nice high created, can price come back into any of these areas, hold support, and then continue up? All right, I was looking at some of these setups like on the 15, the 5 minute, the 1 minute, but there's not enough volume over here for me at least to take a trade at the top over here. These candles are starting to exhaust. Wouldn't be surprised if we get a pullback at least into 1728 to then continue back up, which is what I'll be looking to grab. I'll be live here until around 10 a.m. if you guys want to stay on for us to take a trade. Yeah, I mean, we are creating higher lows on the 1 minute, but I don't really want to take a trade on the 1 minute here. I think that was that push, and now I'm just gonna wait for our higher time frames, at least like the 15 minute. To give us something valuable to take up. As far as US 30 goes, US 30 right now is rejecting that 33,300. The past couple of days we have been bullish on US 30, and then yesterday we came right back down. If you take a look to start the week over here, we've been bullish, right? US stock markets have been continuing up. Actually, if you look at the daily here, we had 3 consecutive bullish days over here. We pulled back during elections and then before CPI, and now price is actually holding that support and the higher low to continue up. So as Sharma was breaking down on the US 30 over here, can we close above this area? You get a nice clean move to take price right through 34,000 over here at least, where I would probably be securing my profits if you get that support formed anywhere in this area. Daily looks very nice, but let's see the lower time frames.
Yeah, check the 4 hour right into that 34. Was that 33?
33,300.
Yeah, 33,300 on the 4 hour time frame. Zoom out a little bit more, please.
Yep.
There you go, right into that consolidation resistance there to the left, and then same thing again. There you go, tapping right into that area once again. Created a little bit of a high, so again, can we see some retracements here, pulling back and all that? You just got to be patient. Like I said, this week is more of the calmer weeks because next week you have a ton of data coming out. Last week you had a ton of data coming out. So obviously we're tapping into these key areas. Don't be surprised when you start to see consolidation, but also don't try to force any trades or anything like that just yet either.
100%.
All right.
Yeah, we've had some major rejections of that 300 level right over here back in August.
Mm-hmm.
And then right over here, we struggled hard to get above that area. Kind of faked it out right there and then continued to create lower highs here. And then we just tanked from there in beginning of summer.
Yep.
So right now, we got clean moves in this range. If we could get that close and some positive sentiment on with the U.S. stock markets, if we hold support there, I fully think that we could come at least up to 34,000.
And all of that, once again, is just liquidity grabs. You don't really have a break of this bearish structure until price breaks past 34,000 or 34,400, and then continues pushing from there. But obviously, that's not going to be happening, especially given what's happening from like an economic perspective right now.
Mm-hmm.
Other than that, I gotta hop off now, Steph.
Sure.
But if you guys have any questions, just message us on Instagram. So mine is at SharmaFX. You got Stefanos at StefanosFX. But we will see you guys soon.